Thank you for joining us. Welcome to Business Incorporated. I'm Chimezie Obi Iwagu. On the show today, 10 African nations face $1 trillion infrastructure funding gap. And Lafarge Wholesome appoints new Middle East boss. Plus, Tulo told to pay Seadrill $254 million over Ghana dispute. Let's get the show started now with the markets. And here in Africa, the markets were all in the red at intraday, with Egypt losing more, down 0.46%. The NSE index was down 0.39%, and South Africa dropped by 0.19%. Kenya was also downbeat on Tuesday, closing low by 1.68%. In the meantime, in the Middle East, the markets were upbeat. At intraday, Dubai financial market was up 0.80%, outperforming the others. Abu Dhabi was up 0.53%, Qatar up 0.46%, and Saudi was up 0.12%. And in Europe, stocks were mixed in early trade amid elevated tensions between the U.S. and China over looming trade tariffs and investment restrictions. For more, let's cross over now to Frankfurt, where my colleague Conrad Bussen is standing by to tell us more. Well, I guess Conrad is not yet ready to talk to us. We're moving now. In the U.S., markets are closed for the Independence Day holiday. However, stocks fell on Tuesday as tech shares dropped sharply, while lingering concerns over a trade dispute between the U.S. and other major economies rattled investors. The Dow Jones Industrial Average declined 132.36 points to close at 24,174.82. The S&P 500 fell 0.5% to 2,713.22, with tech sliding 1.4%. The Nasdaq Composite pulled back 0.9% to 7,502.67, as Micron and Facebook dropped 5.5% and 2.4%. The indices also snapped their three-day winning streaks. U.S. markets closed at 1 p.m. on Tuesday ahead of the 4th of July holiday. President Donald Trump's administration is set to activate tariffs on Chinese goods worth around $34 billion on Friday, which is widely expected to trigger a tit-for-tat response from Beijing. The Trump administration has also alienated the European Union, Canada, and Mexico with its increasingly protectionist stance, which has led these countries to issue levies of their own on U.S. goods. Facebook, meanwhile, closed lower after the Washington Post reported the social media company is facing a broader probe into its data sharing with Cambridge Analytica. Wall Street also looked ahead to Friday in anticipation of the latest job reports, which is expected to be a strong one. All right, let's now move over to Europe and talk to my colleague, Conrad Bussen. Hello, Conrad. Glad to have you on the show. Good afternoon.
Good afternoon, Chimi, or should I say bonjour, as I understand that French is a much-spoken language at the moment in Lagos.
Oh, sure. Bonjour, ça va? Ça va bien, of course. All right. Fitch Ratings has warned that President Trump's trade fight could cost the world $2 trillion in global trade. Are traders' fears abating? And how much of these fears are catching up with financial markets, investors, and the traders?
You know, definitely the topic trade and Trump is still the dominating topic on the markets. The market here in Frankfurt, as you can see right behind me, is in a choppy trading day again. The losses are not as big as they were in China today, where the market has lost again. But of course, everyone's nervous as the July 6th deadline is coming closer. This is the day when Washington said it would impose import tariffs on Chinese goods worth up to $34 billion. And as you know, China has threatened to retaliate in kind. Also here in Germany today, in Berlin, in our capital, in the parliament, the topic was a big one as Chancellor Merkel gave a speech where she warned that tariffs on European cars would be much more serious than levies on steel and aluminium. And Chancellor Merkel also reminded everyone of the last financial crisis, which started about 10 years ago. Merkel said that this crisis could only be addressed quickly and quite effectively because of cooperation of the governments in what she put as a multilateral fashion in the spirit of comradeship. Merkel here in Europe, of course, is closely watched, and those statements have done nothing to really alleviate the nervousness on the markets. We've been getting a couple of good economic data today. Purchasing managers in the services sector in the Eurozone as well as in the United Kingdom are a bit more upbeat about the economy, and they are more the purchasing managers in the indices came in better than what analysts had expected, but that has not really, it's keeping the market a bit, it's keeping the market a bit where it is, but it's not really driving the market up.
All right, let's look at the technology shares, which of course bounced higher, in particular from Asia, but Korea's Samsung seems to be an exception. What could be wrong with this big telephony?
Well, Samsung is expected this Friday to post the smallest profit growth in more than a year, which means that Samsung still is expected to remain the #1 in the global smartphone market with about 20% of the market share. But some of its, especially competitors from China, are getting closer. Huawei, Oppo, Vivo, Xiaomi, you name them, they all are able to produce very good smartphones. And in some of the markets that all of the phone producers operate in, the Chinese have managed to gain market share. In India, for example, Xiaomi recently has managed to reach #1 in the mobile phone market and has overtaken Samsung. What analysts also criticize is that Samsung is not innovative enough, doesn't have much of a technology advance in comparison to its competitors anymore. And analysts say Samsung is relying too heavily on retail sales, on retail stores, while many of its competitors do sell a lot via the internet. They do sell a lot online. Shares in Samsung have lost around 10% of their value during the last 4 weeks. So obviously, not only analysts, but also investors are expecting negative news this Friday.
All right, Conrad, let's talk football. The World Cup competition is gradually wrapping up as we enter the quarterfinals. Now, the sports companies are hanging in there with their deep pockets. Who is leading from the front at the moment? Is it Adidas, Nike, or Puma?
Well, I know that in Nigeria, Nike is first, as you know, Nike is the sponsor of your Nigerian national team. But in this quarterfinal, I can also tell you Nike is first also. It has overtaken Adidas because of the 8 remaining teams in the quarterfinals. Nike has produced the T-shirts of 4: Brazil, France, England, and Croatia, while Adidas is the sponsor of Belgium, Russia, and Sweden. And one team, Uruguay, has another sponsor, Puma. And as you know, I would say the word favorite has been a bit of a curse in this course of the tournament. Maybe Uruguay, the outsider, and maybe Puma, the small sports supplier, are the ones that will make it to the final. We'll have, of course, to wait and see.
Sure, we will have to wait and see, and it's an interesting time for football lovers. Anyway, at this point, I'll say, over, Conrad. See you tomorrow.